Good afternoon, everybody. Happy Monday, and more importantly, happy Star Wars Day. Like my son said this morning, may the 4th be with you. This is our beginning of the week market commentary. I'll follow it up on Friday with another video just as a market recap for the week. So May has gotten off to a bit of a rocky start. Friday was the first trading day of the month, and stocks sold off sharply. Today was a volatile day. And like I have written in my market commentary and spoken about in my videos, volatility is not going away anytime soon. This week alone, we have more than 1,400 companies reporting earnings, which makes it the busiest week of this entire earnings season. This is sure to lead to added market volatility. On top of this, the markets are also waiting for data from various states that are opening up so that we can get an idea of what the process is, what a recovery looks like, and what it's going to take to kind of get back to the way things were. So FactSet is also reporting that over half of the S&P 500 companies have reported earnings, with 63% reporting positive earnings surprises, which, broadly speaking, is a huge surprise because earnings are off about 14% year over year at this point. What this really helps to show is that there's a clear sector by sector divergence when it comes to earnings. The news isn't all bad though, as governments across the globe, including our own, are mulling another round of stimulus bills. This time, that stimulus is going to come in the form of an infrastructure package, which will serve to create thousands of jobs in the United States. It will stabilize and increase the price of oil, which USA production and refinery companies will be more than happy to have happen. We all think of infrastructure as rebuilding roads and bridges, tunnels, things of that nature. But what I think is going to happen in this infrastructure bill is going to be a spend on rolling out 5G. What we have learned from this ordeal is that internet is no longer a luxury, but a utility. My children are being homeschooled as well, and without internet, that would be nearly impossible. Drug company Gilead has also donated their entire supply of drug remdesivir to hospitals and patients globally that are most in need. Roche, another pharmaceutical company, is reporting good results in early trials. Science is not something, though, that we can time. And although we'll be getting constant updates about therapeutics and about vaccines, knowing when that breakthrough is going to happen is impossible. It's an example of the ultimate news that would cause markets to turn on a dime and turn positive on a dime. But trying to time that turn would be a strategy based on luck. And luck is not the foundation for any good plan going forward. On the virus front, the US has been in a plateau for the past month or so, with new cases coming in at about 30,000 a day and about 2,000 deaths per day. We're testing about 250,000 people on average, and the hope is that that can be ramped up over time, as an aggressive testing protocol in place will help speed up our return to life as we knew it. I'll leave you on this Monday with some wise words from Warren Buffett, who held the annual Berkshire Hathaway shareholder meeting this weekend. He reiterated the same thing and the same investment advice that he's been giving from the very beginning. If you plan on owning stocks, plan on owning them for a little bit of a time. You must be both financially and, most importantly, psychologically ready to hold for an extended period. And similar to owning a farm, don't pay attention to what the day-to-day value of the farm is or what the day-to-day value of the stock is. Rather, focus on what the company does or what your farm produces and how they will be able to produce that good or that service going forward down the road. So have a wonderful week, everybody, and I will see you again on Friday for our weekly market wrap-up.